Buenas tardes, Manu. Este dato de empleo que esperamos es una de las cuestiones que vamos a abordar, a analizar a continuación. Lo vamos a hacer con Ross Gerber, es presidente y CEO de Gerber Kawasaki Wealth and Investment Management. Ross, thank you so much for having us a few minutes.
Hey, thanks for having me.
Ross, markets are pricing in more rate hikes than the Fed. 8 in all, if the Fed raises interest rates at each of the next monetary policy meetings. What do you think about it?
Well, I think it's good. I mean, having no costs for money creates a lot of inflation, and that's what we're getting across the world now. And so we need to make the appropriate adjustments for the booming economy we have here in the United States. So this is the readjustment in the post-COVID era, and I think that's what, many people around the world are dealing with COVID in a different place than the United States. But the United States is past COVID now, and our economy is booming because of it. And so rates need to go back to where they were before COVID began.
Is the U.S. economy resilient enough to stand all these rate hikes?
Well, that's the biggest risk in the economy is how far will the Fed go? And if they go too far, obviously it can cause a recession. That would be bad for the economy and the stock market. But this is very early in the process of the rate hiking cycle. And it's something that we'll be more concerned about next year as the Fed continues to raise rates, or if the Fed raises rates very aggressively. But at this time, the Fed's been very transparent on what their plans are, and we're very comfortable with the Fed's plan in driving lower inflation and higher growth in the United States over time. So we're very bullish on the United States right now.
On the other hand, looking at the macro data for this week, the U.S. jobs report for March is coming up on Friday, and of course it will be closely watched, and the ADP National Employment Report will be known this Wednesday. What can we expect from both data?
Well, everybody's hiring in America. So the biggest issue we have is getting people who aren't working back into the workforce, because there's probably at least 1 million people that used to be working that may be retired or for one reason or another hasn't come back to the workforce. So everybody in America who wants a job has a job, and everybody with jobs is making higher wages. And now the demand for employment is so large, we expect people to come off the sidelines and get back into the workforce. So this is a very, very strong time for U.S. employment.
From the other hand, U.S. consumers are still confident. According to the last Consumer Confidence Index from the Conference Board, it rose to 107.2 in March. What this data indicates to us?
Well, we had a lot of headwinds too. When you think about what happened in March with this horrendous war starting and the huge surge in oil prices and inflation, along with all of the uncertainty with rising interest rates, the consumers out shopping and buying things like we've never seen, to be honest. And this post-COVID enthusiasm we're seeing in consumer spending is continuing despite a lot of negative headlines in March. So we suspect as April and May moves forward and more positive headlines reappear, the consumer is going to feel even more confident with rising wages and very, very confident about their future employment prospects. So that once again, we're in a very strong post-COVID economy here in the United States. We're readjusting with rates, and we have lots of risks and headwinds with inflation. But the bottom line is things are growing very fast here in the United States.
And finally, Ross, now that we are ending the first quarter of the year, what can we expect from upcoming companies' earnings?
Well, this is where it's going to get very interesting, because we suspect many companies are going to have a great quarter. Some companies are going to have very difficult quarters because of the higher input costs and inflation. But other companies that benefit from inflation, we expect to have blowout numbers, like the oil and gas industry, for example, agriculture, commodities. So where you have, some companies really kind of taking it on the chin with higher energy costs, other companies benefit from that in America too. So we still suspect a very strong Q1 despite a pretty messy quarter overall.
Thank you so much, Ross. It's been a pleasure.
Yeah, thank you for having me.
Manu, nos quedamos